to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena. Here's your go-to show for real-time stock market guidance with our experts joining us on the show. Do send us your queries on the number that will shortly flash on your screen. Don't forget to include your name, location, name of the stock you want your expert view on, buy price, number of shares you hold and your investment time horizon. Our experts will break it down for you right here on Buy Now, Sell Now. But before we get started, let's take a look at how the markets are faring this afternoon, this morning. Ankita?
Absolutely, Kanishka. Today morning again, I would say that nothing much is happening, but the market breadth looks positive today. We are still hovering around the 25,400 levels. We managed to just maintain those levels yesterday, but we have recovered from the day's lowest point on the Nifty. If you can see on the charts, also we have recovered from the day's lows. We are seeing a recovery of 36 odd points on the Nifty, but it is very flat right now. There's a greater recovery coming in a Nifty Bank. That's up 0.1%, 170 odd points recovery from the day's lows for Nifty Bank. Now, remember, from the financial pack, we have Bajaj Finance, Bajaj FinServ. These are the top Nifty gainers. It is, in focus on the back of the quarterly updates that are trickling in for all the companies. So, a couple of names that are in focus on the back of that. For Bajaj Finance, good quarterly business update is buoying sentiments for both the Bajaj twins. Also, besides that, we have Bandhan Bank that is down 2%, on the back of the CASA ratio coming off, and again quarterly updates weighing down that particular stock. So a lot of stock-specific news that's flowing in, and that is impacting individual specific stocks, because rest of the sectoral indices are trading in the green, except for a bit of a pressure that is coming on Nifty Auto Pack. Market breadth, like I mentioned, looks positive for now. It is tilted in the favor of advances. But specific names like Trent is, of course, the stock for the day that is down almost 8% on the back of a weak management commentary and a downgrade that's come in from Nuvama. They've cut the target price for the stock, and Trent is the biggest loser for the day. That's down almost 8% in trade today. Besides that, from the consumption basket, we have Marico that is trading up on the back of decent quarterly results. We also have Engine One that is, buzzing on. It is down 5% on the back of quarterly updates coming in. So these are the individual stock movers that are in focus on the back of their quarterly updates. Besides that, we also have the capital market stocks that are reeling under pressure today, whether it is BSE, CDSL, Angel One on the back of its updates, and Motilal Oswal. These counters are reeling under pressure. The defense pack seems to be in good stead today. They are all trading up over 1%, whether it's BDL, BEL, GE Shipping, Cochin Shipyard. These counters are up in a way with gains of 1%. So that's how largely the market is shaping up. On the index level, nothing much is happening, but stock-specific moves coming in this market, Kanishka.
That's right. Let's get started with all the queries then. Ruchit Jain, Vice President, Equity and Technical Research at Wealth Management at Motilal Oswal Financial Services, is now joining us to help us with all the queries that our viewers are sending us. But before that, Ruchit, help us with your take on the markets first.
Yeah, hi, very good morning. Well, since last 3 or 4 trading sessions, we can see that on the index front, the market is going through some consolidation, but the overall trend remains positive at the key supports of 25,350 to 25,400 is still intact. Even the 20-day MA, which is around 25,100 to 150 range, has not been broken. Until that is intact, we believe that this entire consolidation just seems to be a time-wise correction within an uptrend. And once this time-wise correction is over, we should see a resumption of the broader move. So, just for 1 or 2 trading sessions, we could see continuation of this consolidation in the markets. But overall trend remains intact, and any kind of declines should be used as a buying opportunities.
All right. Any dip should be a buying opportunity. Most of the analysts are talking about a buying opportunity whenever the market corrects. But let's get started with all the questions then. Keep sending in your questions on the number that's flashing on top of your screen. We'll get them answered by our experts. Send in your stock-specific query, the buying price, the holding period, and your question, and we'll get them answered by experts. And for now, Ruchit is our expert who will be taking in all your questions. Ruchit, first up, this is a question coming in, of course, on the stock for the day, Trent, that is down and out, that's languishing in trade 8% on the back of weak management guidance and a downgrade coming in. So that question is by Jay from Mumbai. He wants to know, he's bought 150 shares of Trent. He's bought it at a buying price of 6,950 for the long term. He wants to know whether he should be holding it or he should be exiting at this current juncture. What is the future for Trent really? I'm sure a lot of viewers would want to know it today.
So we have a huge gap down opening today based on news flows. And before the gap, also, if you look at last 6 months of price activity, last 6 to 8 months, the stock has not shown any kind of great trended up move phase. So we believe that the stock would continue to see some more consolidation going ahead in the short to medium term. Probably downside streams around 5,200 to 5,300, where a major support on the downside would come in. And we can see that 2 or 3 attempts have been made to surpass 60 to 50, but the stock was not able to cross that level. So I think it would be more into a consolidation phase rather than any kind of trended phase on either side. So if we are looking from bit midterm perspective, also I think markets are in an uptrend. So there could be some better opportunities where we could see a good trended up move. So my advice would be to, in case if you're looking from a long term perspective, then if we get any dip towards the support end, which would be around 5,200 to 5,300, that would be the range where the risk reward ratio would become favorable to add some more to add more portions, and one can take a review over there. But at current levels, no, I don't think that one should be in a hurry to add any more positions. On existing positions also, I think you can look to exit some positions or lighten up some positions and look for better opportunities elsewhere.
All right, so that's the view coming in on Trent. More consolidation likely in the short to medium term is the view coming in from Ruchit. But Ruchit, now moving on to the IT pack, we have a viewer, Gopi, who's written to us and wants your view on the IT sector. They say that currently their investment in the IT pack is through IT ETF and mutual funds. They want to know if they should consider a stock like HCL Tech to enter at this point for their equity portfolio.
So if you're looking from bit mid to long term, I think the strategy that you are using right now to buy through ETF, I think that's a better strategy rather than going for any individual stock, because that would help you to diversify in many names within the whole sector. But yes, individually, if I look at HCL Tech, then overall the trend for HCL Tech certainly seems positive only. It does not seem that we would see any significant down move in the stock. So if you want to add more positions to HCL Tech, you can add more. But it would be suggested to, in case if you are looking to add with some fresh investments, then look for HCL Tech. But if you are looking to just make a replacement of ETF with a single stock, then I think staying put with the ETF would be a better option.
All right, moving on then to the next question. This is coming in from Yoga Rani from Saudi Arabia. She says that she holds 2,000 shares for CESC at an average buying price of 200 rupees. She wants to know if she should be holding it for the next 1 month. If so, then what are the targets to watch out for on CESC? Ruchit.
So we have seen a good up move in last 4 or 5 trading sessions in CESC, and good thing is that the up move has also been supported by good volumes. So firstly, the 20-day MA support for the stock would be seen around 171. So on your existing positions, I would recommend to keep a strict stop loss below 171, and you can expect target somewhere in the range of 190 to 195 to book profits.
All right, so that's the word coming in on CESC. But moving on, Ruchit, we have a viewer, Vaishnavi, who's written to us from Chennai. She has 65 shares at a price of 1,960 of Bharat Dynamics. She wants to know if you could help us with the short-term target price for this one.
So overall, the entire space looks quite positive as far as defense stocks are concerned, in which BDL also, the trend remains positive. 1,800 remains a very crucial support for the stock. Until 1,800 is intact, I would recommend to continue to hold on the positions. The immediate hurdle is coming around 2,100, and once the stock manages to surpass this 2,100 mark, then you can expect an up move towards 20 to 50 to 2,300.
All right, that's the word coming in on Bharat Dynamics on the charts. But let me bring on board our next guest, Ajit Mishra, who's the SVP Research Religare Broking. Hi, Ajit. Thank you so much for taking the time out and joining us today and for answering all the stock-related questions. Let me come to you then in that case. This is Sally Devi, who's writing in from Kerala. She wants to know your view on Scient Limited. Ajit, what would you view on Scient for the long term?
Hi, good morning. See, we are seeing mixed trend when it comes to the IT pack and Scient after this sharp decline from its record highs. Almost like 2 months of consolidation is something the stock has been experiencing, but still trading below its major averages. There's no clear sign of a decisive trend reversal yet. But yes, the selling pressure means the seller seems exhausted now, so she can continue to hold her long position in case if she is having any existing longs. Otherwise, she should wait for a decisive close above 1350 mark for any meaningful recovery. In that case, 1450 to 1500 should be her positional target. In the interim, 1250 should be her strict stop loss in case if she has any existing longs.
All right, then that's the view coming in on Scient. But Ajit, another question for you. The question is on Tata Steel. The viewer wants to know what should they hold the stock for a 3-month period? They have 4,000 shares at a buy price of 168 rupees.
Right. So I guess they have bought it off late, and the stock is down in the last couple of trading sessions. So normal decline. But overall, as a metal, as a pack, and in Tata Steel within this space looks upbeat to us. The stock has recovered very strongly in the last 2-3 months. Currently, it's trading well above its major averages, short-term averages. So the overall momentum is intact. But yes, intermediate consolidation is something that cannot be ruled out after this strong move. But the overall momentum is likely to stay. So means 175 to 178 is something that the stock might test in the next leg of the upswing. So as of now, 155 on the closing base should be the stop, and one can wait for the newer highs as a position targets.
All right, with that, it's time for a quick breather, but you don't go anywhere. We'll be right back. We'll be taking all your questions on the other side. Keep sending them in on the number that is flashing on top of the screen, and our experts have joined us. We'll be answering them on the other side. Stay tuned. Welcome back. You tune into Buy Now Sell Now. We're getting all your stock-related questions answered. Keep sending in your questions on the number that's flashing on top of your screen, and we'll get them answered by our expert. Let's get going with all the stocks then. We're joined by Ajit Mishra, and we're joined by Ruchit from the previous segment. Let's get started then to the next question that has come in from... Okay, another question here on Trent. Ajit, let me get in your view on Trent as well. This is Ignatius who's writing from Kolkata. He says, how seriously can a long-term investor take the downgrades given by rating agencies? We all know that Nuvama has downgraded Trent and also cut the target price. He says he has 10 shares of Trent at a buying price of 6,230, and he wants to know whether he can hold it for the next 2 years, and he wants to know how seriously to take a downgrade coming in from a brokerage firm.
So basically, it's a very valid question because of late we were hearing all the positive things about Trent, and then suddenly some news comes post the management guidance, and then followed by the downgrades from the brokings. So we believe that 1 or 2 quarters, downfall or a dip in the revenue and other related guidance is something which is natural. But in case if it sustains beyond 3-4 quarters, then definitely it's a scenario where one should reevaluate his position. So for a time being now, since this damage has already been done, means the stock is already down roughly around 9%, and his time horizon is 2 years or maybe over. So definitely he should stay put. He should not sell in panic and wait for at least 2 quarters of numbers, how the management guides after this period, and then accordingly take a informed call.
Ajit's view on Trent. But moving on, Ruchit, now coming to you. Our viewer has written from Venkat Rao has written from Vishakhapatnam. He wants to know your view on Bank of Maharashtra. He has 8,000 shares at a price of 68 rupees. He wants to know at what price can he average.
I think overall, the broader trend for the PSU space still remains much positive only. But I think one need to be very selective when looking for fresh investment in the PSU banking space. Although Bank of Maharashtra recently has shown an up move, but if we look at the comparative analysis in stocks within the sector, then stocks such as SBI looks much better place where we can see that the leadership would come when the entire PSU banking move higher. For Bank of Maharashtra, the support is around 53 rupees. So ideally, that would be good levels in case if you get the stock on declines to add more positions. But I would suggest that in case if you have to make fresh investments only in the PSU banking basket space, then you should go with SBI.
So better to go with SBI than Bank of Maharashtra. But Ruchit, this is the second. This is the next question is also for you. This is Krish who's writing in, wants to ask you whether he should hold HCL Tech 325 shares at a buying price of 1,315 since September 2021. He's been holding it since then. He wants to know if he should continue holding it in or should he add more at the current level, Ruchit?
Either to hold existing positions, no, because he has seen a good amount of time-wise consolidation or a corrective phase. But of late, we have seen a gradual high top, high bottom structure forming in HCL Tech. Since last 2 weeks, the stock is consolidating around the resistance of 1750 to 1720 range. And if the stock manages to surpass the 1750 again, then we could see a good up move in the short term. So hold your existing positions. Fresh buying could be done if the stock manages to surpass 1750 going ahead.
All right, that's the view. Now, Ajit, now coming to you. Now, Edwin has written to us from Kerala. He wants to know your view on Balakrishna Industries. He has 20 shares at a buy price of 2,400. What's your view? What should the viewer do here?
Right. So, he has bought it at a decent price. Means after this sharp decline from its previous swing high, the stock stabilized around 2,400 mark where he accumulated the stock, and now he's sitting on a decent profit. Still, I believe that is the initial stage of recovery, and the recovery can further strengthen once the stock surpasses 2650 mark decisively. So he should now maintain a trading stop loss at 2550 and continue to hold his position. Once the stock surpasses 2650, then probably around 2800 something that he can maintain as the short-term target.
Let's move on to the next question then. This is Satya Veni who's writing in from Visakhapatnam. He says that he wants to know if he can purchase Chola Finance and Shriram Finance now, or else you choose two best stocks and it's safe entry levels. Ruchit, for the entry levels, perhaps you can guide. And is Chola and both the Shriram Finance good counters to enter at these current levels?
Yes, I believe that the overall the NBFC space would do well going ahead. We have seen since the month of March itself, there has been a good outperformance or leadership coming in this at the start of this bull trend in the banking and the NBFC space. And both the stocks, Chola as well as Shriram, the broader trend remains positive. So last few trading sessions we have seen some correction from the highs, but if you are looking from a mid-term perspective, then this correction should be used as a good buying opportunity. So you can buy if you have a view of 6 months or more. I think Shriram and Chola both should do well once we see a resumption of the uptrend in the NBFC space.
All right. So that's a view coming in on Shriram Finance. But Ajit, another question coming for you. Our viewer Krish has written to us. He wants to know your view on PNB Housing. He has 50 shares at a price of 1,106. He wants to add more at a current price. Should he add more at the current price for the next 3 years?
Right. So, no doubt the stock has done well. In fact, if you compare it with the other players in the similar space, mostly stocks are either trading range bound and fail to see any meaningful recovery. On the other hand, the stock has recovered very strongly in the last 2 months and gradually inching towards previous swing high as well. So, indications are in the favor that the medium to long term trend looks positive to us. And for fresh buying, in fact, one can consider even at the current level since his view is long term. And 1,000 now is the strong base for this stock, at least for the short to medium term. So with that as a stop loss, he can add at current levels. Once we surpasses 1,200 mark, then probably a new high means 1,450, 1,500 something that he can wait for.
All right, that's the view on PNB Housing. But let's move on to the next counter. This is Girish Iyer who's writing from Trivandrum. He says that he holds Avanti Feeds is 1,000 shares at a buying price of 857. Is there any upward scope in the short term, or should he exit? Rajit, any scope for Avanti Feeds to move up, or is it time to cash out of this counter?
So it doesn't seem that the trend is much positive. Of late, we have seen some correction from the highs, and whatever pullback moves are coming, no, there is no volume-based buying happening in the stock. So I think it could see some more underperformance in the short to medium term. Going ahead, major support, if you look at a bit midterm chart, then it is coming around 650 to 660 rupees. So can otherwise keep a stop loss below the recent swing low, which is 710. If the stock breaks 710, then you should look to exit.
Okay, so that's the view coming in on Avanti Feeds. Now, Ruchan, another question coming in for you. This question is from the banking space. Now, our viewer has 1,300 shares of Equitas Bank at a price of 82 rupees and 400 shares of IDFC First Bank at a price of 75 rupees. This is Poonam Anand writing from Punjab. She wants to know what's your view on these two.
So again, Equitas Small Finance Bank has seen a good price volume action, after a decent amount of underperformance. And going ahead, if you can give about 6 to 8 months, then can expect a target somewhere around 78 rupees, which is a previous swing high resistance. So Equitas Small Finance Bank can hold on for potential targets around 78. Keep a stop loss below 63 rupees on your existing long positions. And even IDFC First Bank has managed to form a good support base around the recent swing lows. It consolidated for a while around the 65 to 60 range and has now started forming high top, high bottom structure. So I think this could also rally towards 85, 88 kind of zone. So hold on existing positions. When it comes around 85, you can take a review again over there.
That's the view coming in on Equitas Small Finance Bank. Pardon us, we played the wrong chart was put out, but it was Equitas Small Finance Bank and IDFC First Bank. But with that, it's time for us to slip into a short break. Don't go anywhere after the break. We'll continue to keep taking in your queries, keep sending them in. The number is flashing on top of your screen. So keep sending in your questions and we'll get them answered by our experts on the other side. Stay tuned.
Welcome back to ET Now. You're watching Buy Now, Sell Now, where we are answering all your stock-related queries with our experts. We are now joined by Sharan Lilani, who's an independent SEBI research analyst, and we have Ajit, who's already with us to answer all your stock-related queries. Now, let's get started. Get back to all our queries. Now, we have a query coming from Ram, who's written to us from Mumbai. He wants to know, Sharan, your view on Cipla. He has 50 shares at an average price of 1,580 rupees. His time frame is 1 year. He wants to know what should he do with this one.
So good morning, everyone. So Cipla stock looks very nice on the charts. It's consolidating in a very tight range, and I think it's about to break a small downward descending trend line. So if someone is already holding, I think the chart pattern looks good. I think you can witness a breakout above 1525 levels. So if he's already holding, I would suggest keep on holding. You can see levels up to 1575 to 1650 levels. And your stop loss should be in this stock around 1490. If it closes below 1490 on a daily closing basis, I think you should exit and take the stop loss.
All right, so that's the view coming in on Cipla on the charts. But Sharan, let me come to you again for a short-term view, which is coming from Rajan from Hyderabad. Wants to know your view on TCS. Now, Sharan, this stock has been correcting. It hasn't done much in the last 6 odd months. It has been correcting almost 17 odd %. From here on, do you really see TCS moving up? Because there are a lot of mixed calls coming in as far as the IT basket is concerned.
So Ankita, you're more or less right. I think this is one of the biggest laggards in the whole IT sector. Despite having a very high weightage, the stock has underperformed all stocks like Mphasis, HCL Tech, even for a matter of fact Infosys. But the stock currently has made a low on 7th April. From that level, it is trying to reach at higher levels. But again, it is going in a sideways consolidation. So if someone has bought on a low like 7 between first or second week of April, I would suggest a hold rating with a strict stop loss of around 3360. If it closes below 3360, I think you should take a stop loss and exit the counter. I think there are much better IT stocks out there like Coforge, Mphasis, HCL Tech.
All right, so that's the view coming in on TCS. But Ajit, now coming to you, our viewer Vijaya Kirti has written to us from Chennai. They hold 400 shares of Concor at a buy price of 1,060 rupees per share. They are in a loss right now. They want to know how should they mitigate, should they sell at the current levels?
I guess his buying price would be much lower now because the stock have turned X bonus also of late and it's currently quoting at 600 mark. So let's say once we surpass this area where we have multiple resistances based on the moving averages, close around 620 is the area basically where we have the first hurdle. Once we cross then 660, 680 is something that the stock might attempt. So as of now, he can stay put.
All right, 580 till 580 he can stay put. That's the call coming in on Container Corporation of India. Let's move on to the next counter, which is from the defense pack. This is Shankar who's writing in from Delhi. He wants to know, does Mazgaon Docks deal with Colombo Dockyard make it a better bet than Cochin Shipyard or GRSC for the next 3 to 5 year period? Is it the right time to enter any of these stocks? Sharan, do you want to take this question?
Yeah, so definitely I would suggest Mazgaon over Cochin because Mazgaon builds bigger ships than Cochin and they have a higher margin in the shipbuilding space. So definitely if you compare them one-on-one, Mazgaon is much better than Cochin. But the stocks have had a tremendous rally given the fact that we have a lot of geopolitical tensions. And going ahead, I think on back of results only you could see upward movements coming in. But if you want to make a new position, I would suggest you to wait for the stock to give you a slight decline to levels of around 3000 odd levels, and around about that level you can think about making a new entry with a stop loss around 2800 on a daily closing basis. Right now I wouldn't suggest to make a new entry in the defense space.
Okay, so that's the view coming in from Sharan on the defense space. But we have another question on defense. Ajit, let's take it with you. The viewer, Shri, she's written from Bangalore. They want to know the short-term targets for BDL and Cochin Shipyard and if it's the right time to buy these two.
Stability after this marginal drift, and in fact BDL has reclaimed its short-term averages. It's holding about the same as well. And we are very close to the record highs. So everything looks positive, means the momentum is still intact. The view is short term. Again, since we are seeing excessive volatility within the defense space also, one should be very strict with the stop losses. So for BDL, 1910, if you're okay with 80 point kind of a stop, definitely you can go ahead with the current level as a buying area. And once, let's say we cross the record highs close around 2060, 2070 zone, then probably around 2150 to 2200 something that the stock might test. So as of now, it's a buy with 1910 as the stop loss. For Cochin Shipyard, I feel that it might witness further consolidation the way because it experienced a decline. It was slightly sharper to the others, and we are not seeing a similar kind of recovery also as of now. So it might remain in the range, at least in the near future, with 2250 on the higher band and 1900 on the lower side. So maybe closer to the lower band is something that one can attempt a fresh buy. Otherwise, avoid.
All right, so that's the view coming in the entire defense pack. But let's move on to the consumption basket then, Sharan. This is Bharti Dave who's writing in from Gujarat. She wants to know your view on Nestle. She has 40 shares. She's bought it at a buying price of 2,676, so she's already sitting at a loss here. She wants to know whether she should be adding or should she be exiting. So she wants to know whether she should average in or is it time to exit now?
So the stock from lower levels have seen some upside movement, but despite that, it again and again goes in a sideways consolidation. Since you are already holding on to a loss, I would suggest move to a better stock that has a better price action. I mentioned this yesterday also for ITC. Again, I'll tell you, exit Nestle and enter Britannia. Again, the price action on Britannia is very good compared to Nestle. And I think in the coming weeks, I think you could see levels of 6,000 to 6,200 in Britannia. So if you want to recover some of your losses from Nestle, I would suggest you to shift to Britannia. If you can't take a loss for any reason and you want to again stick to Nestle, I would suggest keep a strict stop loss around your 200-day EMA levels, which is around, I think, 2,300 to 2,350 levels. If it closes below that, I think it's a clear exit signal. And after that, once you should again think about entering a better stock with a better price action.
All right, so that's the view coming in on the consumption space. But moving on, Ajit, now coming to you. Reshma Bhatia has written to us from Pune. She wants your view on BSC. She currently holds 36 shares at a price of 2,800 rupees a piece. She wants to know if she should add another 10 shares today.
So not today at least, because again, after this period of base formation, today's decline has unsettled the bulls. Means we were holding the short-term averages very strongly in the last 7-8 trading session, but today with the gap down, opening, this momentum has bit, I guess, tapered, and probably we can see a level close to around 2,500, 2,550 as the next support area. So maybe around that area, she can consider adding more. And for the entire position, 2,400 should be the stop.
All right, so that's the view coming in on BSC. Sharan, quickly, I want to get your sense on the capital markets theme, especially whether it is BSC, CDSL. What is your view? Because these counters, this entire theme has done very well, though, a lot of upside is penciled in because this theme is here to stay. But at this current juncture, do the valuations bode well for you?
So Ankita, I would suggest anyone who has entered this space at lower levels, they are sitting on tremendous profits. So I would suggest definitely book some profits, but the long-term viewers interact with the growing population and entry into the stock market. They will have better fundamentals in the next 5 to 10 years, but valuations do matter. But I would suggest if someone holds BSC, MCX, they can book partial profits and stay in the sector and shift to a CDSL or a CAMS. They are showing better price action. I think CDSL, despite such negative news, has not reacted that negatively, around 3.5% cut today. But I see a good breakout around 1830 levels. So if someone wants to make a shift strategy, I think they should sell BSC, MCX and shift to a CDSL or a CAMS.
All right. Then let's move on and get Ajit your view on Zensa Tech. Now our viewer Nikhil Sharma from Mumbai holds 35 shares of Zensa Tech at a price of about 862 rupees. They were predicting a target price of 965, but right now they want to know if they should exit the stock or better to hold on for some more time.
See, it seems like a very tight range consolidation while holding of the short-term averages. Volume is missing. So for a time being now, possibility of a dip or further consolidation seems high. So the prudent approach is to exit the stock, and to re-enter, one should wait for a decisive close above 900 or a dip towards 780 area.
All right, let's move on then to the next counter. This is KS Rao, who's writing in from Guntur. He says that he has 500 shares of Manappuram Finance at a buying price of 94 rupees. Please, he wants to know the prospect for the company for holding it for another 1 year. Sharon, the NBFC space has been, a common consensus call for all the analysts. What do you make of Manappuram, and for the next 1 year, is it a hold for the next 1 year?
So Ankita, definitely I think the company has a management change. One private equity player has also entered. The price action is very good. Stock is holding above all its moving averages. Even it has never, despite such negative market, I think in this week as the market has corrected around 300-400 points, the stock is showing a very tight consolidation, and I think it's just about to break out. So you could see a breakout around 280. If anyone has bought at lower levels, I would suggest to a hold rating on the stock. The stock looks very good in terms of price action, and if someone wants to make a new entry, please do so with a stop loss of around 260 on a daily closing basis. Price action is very strong, and you can see a breakout around 280, about 280 levels.
All right, so that's the view coming in on Manappuram Finance from Sharan. Now, Sharan, let's stay with you. Our viewer Satya Veni has written from Vishakhapatnam. Another query on defense sector, actually. They want to know any 2 stocks that you would like to suggest in the defense space, and their time horizon is 18 months, and they want to enter now. So any 2 picks at the current levels.
Also, all the stocks have had a very good run up. I wouldn't suggest right now, even for 18 months to enter. I would suggest wait for a dip And once the dip comes and it consolidates and has a sideways consolidation, then you can think about entering it again. Again, stocks that are on my radar, again, Mazgaon Dock, amazing company, one of the highest margin in shipbuilding. And once it comes around to 3,000 odd levels, even 2,800 levels, I think you should think about entering it there. You will have a very good risk reward ratio. So Mazgaon Dock at between 2,800 to 3,000, you should think about entering.
All right, moving on to the next counter. This is coming from Zeenath, who's writing in from Ranchi. She says she wishes to buy Ashok Leyland and Castrol India for the medium to long term. Please suggest a good entry level. Sharan, you want to take this?
Which one?
This is for Ashok Leyland and Castrol India. She wants to know the entry levels for both these counters. She wants to hold it for the medium to long term period.
So for Ashok Leyland, I think slightly negative price action in the last week. I think the stock can correct to around 240 odd levels, and once it 240 to 230, around about 230 to 245, I think if a good entry is there, you can start accumulating there. But do not expect big moves from Ashok Leyland. It's a very slow mover. It gives around 10 to 15% move on an average on a yearly basis. And which was the next stock, Ankita?
The next stock was Castrol.
Castrol. So Castrol's price action is much better than Ashok Leyland at least. I think if you want to enter, you can make a position at current prices between 210 to 220 with a strict stop loss of around 200 rupees on a daily closing basis. The stock is testing its descending trend line, and I think once it breaks out about 230 odd levels, it can retest its previous swing high around 280 levels. So for Castrol, I would suggest to accumulate around 210 to 220 levels with a strict stop loss of around 200 on a daily closing basis.
All right, so that's the view coming in on Ashok Leyland and Castrol India from Sharan. Now, Ajit, now coming to you, our viewer Kaushik Mitra has written to us from Mumbai. They want to know which would be a better pick, Bajaj Finance or AB Capital for a fresh entry.
See, if the view is short term, I would recommend to refrain from both because we are seeing consolidation after a very strong up move in both these stocks. So for Bajaj Finance, let's say once we reclaim 960 area or a dip towards 880, then it could be a good buy considering the risk reward. AB Capital, once we, let's say, see a dip towards 260 area where the short-term moving averages are placed, around that area he can consider, but not the current levels.
All right, moving on then from AB Capital and Bajaj Finance to the next counter, which is coming in from Sudha, who's writing in. Sharan, she wants to know, she's been holding Godrej Properties and she's been sitting at a loss in the last 9 months. She wants to know if she should sell it or she should hold on and perhaps wait for an up move.
So Ankita, I think this is one of the laggards of the real estate sector. It didn't basically join in the rally like you saw in DLF, your Prestige, your Oberoi. But looking at the new launches and looking at the rate cuts and tax cuts, I think real estate is going to have again a very good cycle in the next 2-3 years. I would suggest definitely hold on to the stock. It's I think one of the largest real estate builders in India. So it will come back sooner than later. So I would suggest hold the stock, but definitely I would suggest have a stop loss. The stop loss should be around 2,050 rupees on a daily closing basis. If it closes below that level for any reason, I think you should exit the stock and review it after 3 to 6 months. Till then, it's a hold.
All right, so that's the view coming in from Sharan on Godrej Properties. But with that, we're completely timed out on this edition of Buy Now, Sell Now. Thank you so much, Sharan and Ajit, for joining us today and helping our viewers with your expert views. With that, it's a wrap. It's a goodbye from me and Ankita and the entire team that puts the show together. Markets at noon coming up next.